Hi, this is Sajana and my friend Tina here. Today we are going to make a video presentation for our assignment, and the topic of our assignment is a firm's cost of production, and I'm going to talk about the items included for the firm's cost of production, and my friend Tina, she will discuss about the links between firm cost of production and the total cost. So simply, cost can be discussed as defined as the money value of goods and services provided by firms to the customer, normally together revenue. And every firm has a set desire or set goal to get maximum profit in a business. So every firm is doing their best to get, or they are just they are creating a different assumptions, they are finding a lot of alternatives uh, to maximize their profits or of business. And there are different items included in a firm's cost of production, and one of them is a cost as an opportunity cost. Opportunity cost can be explained as uh, losing a benefit when choosing one option over another. Simply, we can take an example of Rita, where she can spend 1 hour taking her 1 hour taking her dance classes, and other hand she cannot use that 1 hour to read a book. That's we call about the opportunity cost. And in an opportunity cost, there are two different costs included. One is implicit cost and another is explicit cost. Well, implicit cost can be defined as the opportunity cost of resources, skills, or talented, where um, where it is used or owned by a owner. For example, owner have a skill to dance, to perform a dance, and he can earn 100 in a day after performing in an event. So he cannot earn that 100 anymore if he spend that day in his business. So that $100 he forgone, which is a implicit cost. And another is the explicit cost, which can be say as a say as the um, forms, which can be seen as the expenses or the money amount outflow from the business. That is the explicit cost. We can also have an example of that explicit cost, where our owner can spend $200 to get a new coffee machine, but he cannot use that $200 anymore to spend something else. So that means the explicit cost. um, there is another option, another items which included for the cost of production, and which is a cost as a capital of opportunity cost. And they we can in this item, the firm has to expand firm has to spend his money, his capital, to to perform or to buy or um, to spend their for the production of the farm. And the capital cost as a capital of opportunity, we can have a look the example, where a owner can invest $1 million to buy a new shop, and in that case, instead of investing $1 million in the shop, he can if he transfer or if he transfer his money, his $1 million money in his saving account that pays a 10% interest rate, that it comes $10,000 in a year. So that $10,000 is the cost of capital of opportunity cost. that he cannot earn that 10,000 in a year anymore. mm, so mm, and that is they are the
Hi everyone, my name is Tina. Thank you, Sajana, to tell us about the item included in the cost of production. Now, I will talk about the link between the firm's production process and its total cost. As we discussed by Sajana, we know that the production process linked to all the type of the production uses. Beginning from use of raw materials, manufacturing, and the transportation, all the production costs will impact the firm's total costs. The total cost consists of variable costs and the fixed costs. It is an amount that the firm pays to buy the input into the production, which including all the production process costs, or when offering the services. The total cost will directly impact the firm's profits based on the cost of the products through the production function. It will help the firms to determine how the total costs vary with the quantity produced and set a very good selling price. For example, in the case of short-run production, to examine the production details, only a few economic characteristics of short-run production pertain to output. Because we know that the short-run production only variable costs, such as labor, packaging materials, and variable according to the market demand. But the fixed assets, such as the buildings, will not be changed. For instance, if a firm adds one worker, the marginal product will increase because of the additional worker, but the total cost will increase as well. We must examine the production and the pricing decisions of the enterprises. And the most important part is the relationship between output and costs. The curve of the total cost gets steeper and steeper as the production increases. Now, I will show you two charts. The two charts here shows two examples of the YC yogurt factory with a production function and the total cost. We can see that the relationship between the quantity of the output produced and the total cost of production. In this example, the cost of YC's yogurt factory is $25, and the cost of a worker is $10 per hour. If the company hires one worker, the total cost is $35. If the company hires two workers, the total cost is $45, and so on. This information in these two charts shows how the number of workers YC hires is related to the quantity of the yogurt they produce and to total cost of production. Compare these two charts, we can see that the relationships between the production and the total cost, which is impact to profit of the company. In addition, the firm's production and pricing decision is very, very important. If the firms know how to control and minimize the cost, it will reduce the production cost in order to maximize the profit for the firm. Also, to minimize the total cost, the process needs to be considered all type of costs, such as the fixed cost of the raw materials, workers' wages, and the transportation costs, which can be adjusted through the technology uses, as well as the average cost of each output and input. Thank you. Our presentation is finished today. Thank you, everyone. Thank you, Miss.